Dividend investors, bonjour. Mike here, founder of Dividend Stocks Rock and passionate investor. Today, I'm offering you 4 different types of filters that you can do throughout your research to find the stocks that should belong in your portfolio. You know, as an investor, you have access to thousands of investing opportunities, but only a few of them are really worth it. So today, I'm going to show you how I use the DSR stock filter to narrow down my research and make sure I pick the best stock from the best basket. Let's take a look at what's inside DSR. All right, so welcome back on DSR, so dividendstocksrock.com. This is my membership website. What I'm going to show you today is how I use the stock filter that is on our platform. Obviously, you can use similar stock filters that may be free, like Finviz, for example, with similar results, not exactly the same, but at least you'll get an idea of like how you can use your favorite stock filter to narrow down your research and optimize your time. So on the platform, we have a REIT screener and an ETF screener, but today we're going to just look at the stock screener with the stock analysis. So we're not going to look at the analysis, but just the stock screener part. As you can see, we track over 1,100 dividend stocks on the US and on the Canadian side. So if you want to look at each of them one by one, it's going to take too much time. So here's how you can start with what I call a 5-minute stock screener. So in my saved views, because I can like save my previous research and I can name all of them. So we have like top Canadian, buy list, sell list, Rockstar. We're going to talk about this one in a second. But first, I want to introduce you to the 5-minute research. 5-minute research, well, it tells you, it pulls out a research very fast and it narrows down like the number of stocks to a very bare minimum. So just to get a quick idea, if you don't want to spend too much time on a stock screener, but you want to pick high quality, this is a place where you can go. As you can see, that screener will give you 29 entries right now, so it's not much. And some of them are duplicates, such as Royal Bank on the US side and Royal Bank on the Canadian side. So even then, you're not even at 30 stocks, maybe at 25. So what's inside that filter? Well, pretty simple. We use a prorating from 1 to 5 and a dividend safety score of 1 to 5 at DSR, so 5 being at the top. So now you set up your minimum for the prorating as 4. So you just want to have companies that at DSR we really like, and with a dividend safety score of 3, meaning that the dividend increase will be at least to match the inflation. So obviously we're not talking about matching current inflation at 7, 8, or 9%, but rather having something a low single-digit number between 1 and 5%. If we go a little bit further, we don't put any minimum or maximum for the dividend yield, but we do have a minimum set for the dividend triangle, meaning that we want to have at least the 5 last years of earnings per share having some growth. So we put 1 for earnings per share growth over the past 5 years, and that's analyzed growth rate. So a 1% is not much. It allows a lot of wiggle room considering COVID also, because sometimes like during COVID, earnings went drop for a year. So you want to make sure that you have a full picture of like all stocks that were able to weather the storm and still generate some earnings growth over 5 years. Same thing for revenue. So the idea is to have a company that shows revenues going up, profits going up, and then the ability to increase its dividend by at least 1% per year on analyzed growth rate. So dividend for 5 years at 1%. So we're not done. We're just going to look a little bit further. We don't put anything for the payout ratio. We don't put anything for the PE ratio either, or the average dividend yield. Actually, for the payout ratio and the cash payout ratio, I love to have those metrics inside my filter, but I never filter by those. You know why? Because if a company has a bad quarter, the payout ratio could go above 80% and would be discarded automatically by the stock screener, but in reality, it's just to have a context, and there's a reason why the payout ratio is so high, and it's only temporary. So you want to make sure that you are aware of high payout ratio in your filters, so you can add that column, and you can see we have the column of payout ratio and cash payout ratio here. Actually, you can play around the stock screener and add and withdraw plenty of other columns, but I want to know about it, but I don't want to filter by it. So going down a little bit below, we have advanced filter. So this is where you can add the industry or the market cap, the dividend frequency if you're looking for monthly dividend payers. But what I put here is the minimum ESG score. So ESG stands for environmental, social, and government. So it's very trendy. Just want to have like a basic score. This scoring system is provided by Refinitiv, which is similar to Bloomberg. It's a financial data system. It belongs to the London Stock Exchange, and they combine multiple factors to determine an ESG score between 1 to 100. So at 50, you just cut in half just to have a minimum of ESG. It's not a major decision maker, but it helps you to narrow down even more the search. And finally, we have the Chowder rule. Chowder rule is dividend yield plus the average of the past 5 years of dividend growth. I mean, it's dividend growth rate. On my side, I use the 5-year annualized growth rate. Why did I put 8? Is because I want to have a balance between the yield and the dividend growth. So for a stock to show a Chowder rule of minimum of 8, if it has a 3% yield, it needs to increase its dividend by at least 5% per year. So a nice growth rate of 5%. 5 plus 3% of the yield, that makes 8. That meets my Chowder rule system. I could put 7, I could put 9 depending on what I'm looking for. Here with 8 or 9 Chowder rule score, it just gives you a good balance between both yield and growth. So depending on what you're looking for, you're gonna have this either income or growth of income provided by this list. So obviously 29 stocks is probably a bit too narrowed for most of you guys. So the second filter I want to show you is the dividend triangle. So the dividend triangle is really all about the basic filter that we use at DSR. So as I said earlier, I want companies that are thriving. So business showing increase of sales, increase of profits. Well, technically they're making more money. They have more money to reward shareholders, so they want to share their wealth. So stronger dividend growth. And those businesses that are increasing their sales, making more money and giving more money to shareholders, well, technically this is the type of business that everybody wants in their portfolio, right? You, me, index investor, any like growth investor, retirees, everybody wants to have a thriving business that can go through recession and are able to increase their dividend. This is a sign of robust balance sheet and healthy business model. So to put that rough research, I put a minimum of pro rating and dividend safety score of 3, which is not that much actually, but I want here to increase my scope and have like a large database to search with. So I put the minimum for the pro rating and dividend safety score, and I also put the minimum for the earnings, the revenue, and the dividend growth per share. So at this point, I have a lot of stocks. If I go right down at the bottom of this one, I unfortunately have 434 stocks. So that's like what, like almost 40% of all the companies that we cover at DSR. So that is definitely too wide of a research, but that's a good starting point for your database. And then you can, with this kind of filter, what I would do right away is probably just go here and start my add another filter for like either Canadian or US stocks. So let's say I want to look at US stocks, and then I would narrow it down per sector. Because technically, this type of research will help you if you want to increase your exposure to industrial stocks, for example. So if I have the minimum dividend triangle for US stocks in the industrial sector, now I'll narrow down my search to 62. So it's going to be a lot easier for me. And then I can play around with a few other metrics and then focus on exactly what I'm looking for as an investor. So now we have looked at a very narrowed research, a very wide research. I would like to end this video with 2 more. One for retirees, so the retirement research, and the last one, the Rockstar list. And actually, if you want to download the results of the Rockstar list, you can go in the link description below. There's a link right there. If you subscribe to the newsletter, you're going to receive that research into an Excel format every single month. So now, Let's take a look at the retirement filter at first. And this one you'll see we'll put similar research in terms of the dividend triangle. So we have like the same pro rating, same dividend safety score, but in the same dividend triangle, so a very low one. However, we're gonna put a dividend yield of 4%. So that's the minimum that they're gonna have. So you're going to have like those solid business that are still able to increase their dividend, that are still showing some growth, basic growth, but they are also generating a better source of income for retirees. One other thing that I've put here is a maximum payout ratio and a maximum cash payout ratio of 125. It's going to cut down a little bit my list. Maybe I could leave it up and look at other stocks over 125, but you know what? At 125, that's enough little wiggle room to look at interesting companies without taking those that has too much risk, because at this point, we're looking for safer investments. So it's just normal to narrow down your research and make sure that you have a list of high quality stock. One other thing that I would suggest you to do is to go in the advanced filter and probably put a minimum market cap. So you don't want to have like any small cap. So on this research, for example, we can see we have Aecon, which is a small cap in Canada. So you might want to reduce it and avoid those generous yet more volatile type of stocks in your retirement portfolio. That really depends on the type of investment you are. I'm pretty sure that once I'm at retirement, since I have a very high risk tolerance, I will probably accept to have a few small cap in my portfolio, even if it means to have more volatility. If I have higher yield there, maybe it's going to be interesting, but that's really up to you. I mean, you know, there's plenty of ways to reach your goals, and I'm not here to tell you it's good or a bad thing. This research actually narrowed it down to 89 securities, so that's not too much. Definitely a good starting point to make some research. And as you can see, you also have duplicates on US and Canadian markets. So you have Canadian Natural Resources here, you have CIBC Bank, you have Canadian Tire. So you probably have like a list of like 70 stocks to go through, so which is not too much. And you can always filter by industry, by sector, or by market to narrow it down. And then the last but not the least, the Rockstar list. The idea behind the Rockstar is I wanted to have a research that is relatively wide, but that will focus on dividend growth. I mean, I'm a dividend growth investor. My number one focus on every research is always what's the dividend growth look like and how it's going to happen in the future, if the dividend growth is sustainable. All my questions revolve around that because this is what I'm looking for. Why? Well, studies showed that dividend growers and initiators tend to outperform the market and do it with less volatility. So that's more money in your pocket, less stress. Those are two things I want as an investor, and I'm sure you do too. So for the filter here, again, basic research here, basic criteria, pro rating of 3, dividend safety score of 3, no minimum yield because I love those low yield, high growth stocks. However, a stronger dividend triangle. So earnings and revenue still at 1. However, the dividend growth rate, I want it at 5. So I want like mid-single to high single digit dividend growers. This is where I want to have like the best companies focusing on my investing, my type of investing strategies. This one actually will provide you a wide list of 347 stocks. So again, similar to the dividend triangle, what you want to do with this one is to add a few filters. And this is what you can actually do now, because you can click on the link description below, subscribe to the newsletter, and receive the list in an Excel format with a bunch of financial columns where you can use additional filters. You can sort the stocks according to your criteria, and then it will ease your research. So just by looking at sectors or looking at market cap, or payout ratio, it will narrow down the research to maybe a dozen stocks in what you're really looking for. And then it's going to be super easy for you guys to select the company that you want in your portfolio to start the year on a strong foot and make sure that you are well invested. If you have other requests about stock filters, let me know in the comments. If you have like any types of other research you would like me to show you how I would do them, that will be my pleasure to help you out, to give you a strong base. Obviously, you don't need to be a DSR member. You can use other types of filter, but this is the platform I've built, and this is the platform I use to manage my own portfolio. So I put my money where my mouth is. You can't blame me, right? But at least I'm providing to you the free results of that search in an Excel format right there in the link description below. So all right, we're gonna talk again on next Thursday, and until then, don't forget to stay invested.